Our top story at 4:30 now. An ugly day on Wall Street. Stocks plummeting amid worries about a U.S. economic slowdown. Markets here tumbled. This was after falling in both Europe and Asia. Joining us now to talk about the markets is Eric McAley, Assistant Professor of Finance at Quinnipiac University. Eric, thank you so much for being here with us this afternoon.
Happy to be here. Thank you.
So set the stage for us. There's a confluence of factors going on, but this is spillover from Friday following a disappointing July jobs report. What are the concerns here when you see those numbers?
The biggest concern, honestly, is that analysts believe that maybe we may be heading into a recession, or at least it's the precursor to a recession. It's probably the biggest fears. We also have, more turmoil overseas. We have a variation in the election at this point, right? So there's a lot of unknowns. And plus, to be frank, we're in August, and August traditionally is the weakest month of the year statistically, and also less volume traded. Most people are on vacation.
Let's talk about the Federal Reserve, which declined to cut interest rates last Wednesday. Some saying the Fed's got to do something, got to step in. What do you think about that?
It's a good point. It's a good question. On one end, I feel like maybe they should step in a little earlier than they will. But the fact of the matter is, we've only had a couple of pieces of data that were negative, and I think the Fed is going to wait for a string of data that tells a story as opposed to something that might be an aberration.
And you talked about this in the beginning, that there are growing fears of a recession. We've heard that word thrown around today. Is that an overreaction, you think, to what's going on, or how would you gauge that?
I think it's fair. I'm not sitting here saying we're going to have a recession, but I don't think it's unfounded. And if many of the data points are heading negative, some of them are actually doing better than others. So we're sort of in this no man's land of we need to be careful and cautious about it.
So what would you tell people to keep an eye on as we look at the market and we look at the numbers today?
I would just keep an eye on two things. Interest rates, so 10-year note, Treasury note. You can find that in any Google search, as well as the stock market. And just keep an eye on that for the next, I'd say, week, and you'll get a good sense of where investors' minds are. So if we see violent action, then in a negative direction, we know that people are still scared of what's going to happen. And if we see it dropping, then sort of leveling off, which is what I think is going to happen over the next week or two, I don't think there's any room to panic here.
All right. A lot to keep track of. Eric McAley, Assistant Professor of Finance at Quinnipiac University. Again, thank you for being here with us today.
My pleasure. Thank you.